not really too enthusiastic about this Bitcoin price action, right? So we just put in, that is a 50-day low. 50-day low. One of the key points of confluence that we had for this bearish momentum was that the EMAs crossed for the first time in 100 days. Where's the stream hat? That's a good question. Maybe we'll get it later in the stream. The EMAs crossed, bearish confluence, right? So now what we need to look at is we need to look at spot volume. So let me bump that up here so it's easy to see. So what I'm seeing here with, oh, where'd it go? Hello? Oh, there we go. So what I'm seeing here with spot volume, there it is. Spot volume. So as price is going lower, this is just a lesson on volume analysis. Let me make this bigger so it's easier to see. So we got a couple things going on. Number one, we got the green bars in the middle of the screen. The green bars are increasing. This is the volume. This is the volume. This is at the same time that price is going lower, right? So that means we have an increasing amount of sell-sided volume as the price goes lower. That's not ideal. That's not ideal. If we were to see a bit of a reversal of trend, what we'd want to see is actually the opposite. We'd want to see a really high amount of sell volume to start, and then we'd want to see a decreasing amount of sell volume as everything played out. So far, spot volume is increasing as price goes lower, which kind of tells me that more and more people are scared, right? More and more people are kind of cognizant of the downside. Price is decreasing, sell volume is increasing. That is not good, plain and simple. That is not good, plain and simple. We're going to be looking at everything, guys. This is a top to bottom Bitcoin analysis. Happy Monday, Bacon Boy. SL, bro? What are you on about? Literally guts. So first thing, I'm gonna write these observations down. Spot vol decreasing or increasing as price marks down. Cool. We wrote down our first observation. The other thing that we need to look at is I'm going to minimize this little spot window. I'm going to bump up open interest. Open interest got flushed pretty good here. Open interest is the notional value of all of the derivatives. A couple things that I want to point out here. There was a massive OI flush on this second red candle. So a couple things I want to point out here. This OI flush that happened right here, that was not new price action. Right? This was not new price action. So this candle took place in and around this body. So between like 40.2 and 40.7. But we hit a massive flush in OI. And what that tells me is this spike here was a long bias. This was a long bias OI jump. And that tells me derivatives were buying the dip, which is not good. Degens were buying the dip on leverage. Degens were buying the dip on leverage. That is not ideal, right? OI was going up as price was going down. We got another flush and OI flush. The only way that could happen is if longs got liquidated. Plain and simple. Plain and simple. So we have two observations now. Oh, I accidentally deleted them. Where can I write these down? No, we'll just remember them. We'll just remember them. So open interest got absolutely rinsed. The other thing that we can look at is funding rate. Funding rate helps us determine directionality of these degens. This is more confluence to this thesis because funding rate is still green. Funding rate is still green. If funding rate is green, that means the derivatives ecosystem is long biased. This only talks about futures. We'll get to options. Bear with me. Bear with me. So funding rate is green. So we've come to the conclusion that spot volume is shit. Open interest jumped because people were buying it on futures, and funding rate remains green. People are willing to get punished here. People are willing to get punished. Bitcoin put in a 50-day low after the EMAs crossed after a 100-day span of 13 above 21. Okay, I'll admit, ladies and gentlemen, it is not looking good. It is not looking good. The other thing that we can look at is liquidations. Liquidations provide a bit more context into who's actually losing money. If you want to look at liquidations, it's best to look at it in a granular viewpoint, so an hour. It looks like actually, yeah, it was mostly long-sided liquidations, forced sells. The liquidations on Velo is pretty confusing. If it is red, that means people were forced to sell. That doesn't mean shorts were liquidated. This is like a forced position closing. So really, I don't want to say like we're accurate with our analysis, but I think we have a good justification for what we are thinking at right now. The other thing that I want to look at is I want to look at the volume profile on a high time frame and try and figure out, is 40K actually a legitimate support? My gut instinct is no, but if I'm going to be de-risking, I want to be a little bit more certain. So what you can do is you can grab this tool, where is it? Fixed range volume profile. So the key thing is if you're going to grab from, if you want to see 40K, you have to grab underneath 40K. That's the way I see it, is if you want to look at the volume profile for 40K, you have to grab a wide enough range that you can actually see if 40K is legitimate. Volume profile, oh, they have visible range now. Oh, shit. Damn, dude, Velo data is actually fucking unbelievable. Velo data is actually fucking goated platform for real. So what we're going to do is we're going to hop in on the 12 hour. And so what this shows is basically price blocks. They're $1,000 wide, more or less $1,000 wide. And it provides insight into if a specific region has been traded frequently in the past. So what we can do is we can take this block over here on the right. Oh, you guys can't quite see that. Let me adjust the stream. We can take this block over here on the right, which coincides with very low volume, We drag it across and we can see there is very low trade history, basically between 39.3 and 41, I would say, which coincides with what we were understanding, right? Because these were wicks, right? They're not full body candles. They're just fucking pump or dump and then pump right back up. So that tells me there is really not much buying interest at this level. So overall, things are not looking good. What up, Claire? How are we doing? Are we learning stuff, chat? Is this useful? Are we learning stuff? Let me know. I'm going to drink some water because I just fucking ranted, but let me know. Are we liking it? Are we vibing? What are the likes at? What are the likes at? If I'm spoon feeding this shit, bro, the least you can do is like. So like I said, we need to look at spot volume is only 1/10 of the picture. There is 10 times the amount of volume in derivatives than there is in spot volume. So you have to look at so much more than just spot volume if you want to understand. The other thing that we're going to look at before we make a decision is we're going to look at the options market. So the first thing that I want to look at is the IV structure. The IV structure, how can I, let's do this. If I just keep zooming in, will it be better? No, let's do, sorry, I'm just trying to make it so you guys can see. So the implied volatility structure is basically, how much volatility is the market expecting over specific time periods? So the market is expecting a lot of volatility between now and February. Like that's what this little spike is. And then what we can do is we can hop over and see the most traded options in the last 24 hours. Again, pretty much only in February. Delta skew is useful because delta skew, if you want a higher time frame, you can see delta skew is basically when this is very tight. When the delta skew is very tight, that means there is a very large difference between the value of a call and a value of a put. So now that we have actually broadened our delta skew, to me that's actually a sign of a healthy market. What else can we look at? We're gonna look at the futures market again. Again, this is another really important thing to understand. This is the funding APR heat map. If we pull out to the monthly, you can see how little people are buying on leverage, right? If it's yellow, that means people are buying aggressively on leverage. And after January 2nd, there's basically been a complete absence of people buying on leverage. The other thing, open interest changes, large cap over the last day. Open interest really hasn't spiked that much. And the reason open interest hasn't spiked that much is because we pumped and then we dumped to liquidate everyone. That's the way I rationalize it. All right, the other things I want to look at, top gainers, see if there is any pairs that are moving to the upside in the last 24 hours. MAV, never heard of that shit. AMB, never heard of that shit. SSV, never heard of that. MDT, never heard of that. Sweet, I know that one. NKN, Blur, TRX, SNX. Yeah. There's no green dildos right now. OI normalized CVD, cumulative volume delta, top gainers last week. Yeah. That one's a complicated one. I can't fully explain it, TBH. CVD is cumulative volume delta, so you can look at inflow versus outflow, but then you look at OI normalized, so you divide it by the change in open interest. Yeah, I don't know. Complicated. I don't think it's that useful, TBH. So basically, we have come to the conclusion, beyond what I would consider a reasonable doubt, that this thesis has come together. We had a spike in OI. Oh, you guys can't quite see this. This thesis has basically come together. So we had degens were buying. We had a spike in OI with low spot volume that is symbolic of a fake out. We had low spot volume with positive funding rate, meaning degens are catching the knife. Options market suggests this was a healthy pullback. The 13 and the 21 EMAs up here crossed for the first time in 100 days. At the same time, BTC printed, it is now a 50-day low. We didn't quite get the hedging opportunity that we wanted, but I got a feeling we're going to bounce. So, what's up, Detail? How are we doing? Here's what I'm thinking, ladies and gentlemen. There's two possibilities. Of course, there's two possibilities. First, let me redo a chart here. Right, this is the exact same trend line that we were watching before, right? Just a series of lower highs that broke down. Just to let me hide these EMAs for clarity purposes. I think there is a possibility. That we maybe rip back up to 43K. I think that is a possibility. What would be really painful for this situation? So I'm gonna do yellow for this scenario, and then I'm gonna draw another. So what I think would be really painful is if we went down just low enough for everyone to think that we're fucked, and then we rip back up. People FOMO sell, people FOMO buy, and then we actually just fucking nuke. I think that is possibility one. This is the kind of behavior you would see if you were trading SPY futures or something like that, right? Sweep the downside liquidity, reverse test a high time frame resistance, come down. This, to me, would be very painful for most market participants. Do I think it's likely? I don't know. In the context where we're not seeing much spot volume, I think it is kind of likely. So this right now, the yellow viewpoint is kind of my default viewpoint. What I think would be almost too easy, because dude, I posted a chart on Discord last night, and 90% of people who saw that chart reacted bearish, right? So this dump would be almost too easy if it literally just went like this. This dump would be too easy to play if it literally just went like that. I'm going to go ahead and I'm going to make that pink. I think those are the two possibilities that we're kind of looking at. One is a max pain retest of low 40s, maybe 42 to 43K. In that situation, I am going to be shorting small size but high leverage, because IMO, I am not going to exit positions until 38. Like I said, we are kind of wrong. Sub 40, but we are really wrong sub 38. So, yeah, that's basically what I think of the market is. I think we're going to take another leg down, but we need to be watching spot volume. My gut instinct is that we will be round tripping this. To 30K minimum. I can't tell you when we're going to get there, but my gut instinct is that we are going to work our way down to 30K. And if you are an unsophisticated investor, which respectfully most of you are, honestly, we got people in chat saying they're going to buy this on payday, they're going to buy that on payday. What I think is a really reasonable course of action is that, let's say you're going to buy 5K worth of crypto. Buying 5K worth of crypto at once, sketchy. If you only have 5K in dry powder to deploy, spending all of it at once is sketchy. What I think is reasonable is small amounts on a regular basis. You just unload 500 here. Oh, another red day, 500 here. Another red day, 500 here. Stay patient, because undoubtedly this market from a statistical point of view is bearish, right? The EMA's crossed. We're getting 50-day lows. Price at market structure is bearish. And so to me, if you fully deploy right now, because if you fully deploy now and then Bitcoin fucking dumps to 30K and you have your dick in your hand, you're gonna feel like a bozo. Undoubtedly, you guys already have quite a bit of upside exposure. Undoubtedly you do, right? Because you've been buying dips. Right? Undoubtedly, you guys already have upside exposure. So now the important part is to remain defensive. Personally, I think we are going to rebound a little bit. This whole way down, the most we've ever gotten was 2 consecutive red 12-hour candles. I got a feeling we're going to rebound a little bit, but that buy volume is low. Anyways, guys, was that helpful? That's what I think about the current market. Can you remain defensive by not doing anything? 100%. Stablecoins are not a bad position, bro. Stablecoins are never a bad position, man. Don't let anyone ever fucking tell you that stablecoins are a bad position. Ever. Don't let anyone ever tell you stablecoins are a bad position. Unless it's like UST. You know what I mean? Gee! We're getting some love from the chat. Thank you guys. Because you guys weren't saying it.